All right, guys, back to work. Fantastic job today. Hope everyone made some money out there. Election day is finally here. And boy, the markets, they must be liking something going on right now because this big move today kept going up and up and up. Now big moves. Big moves have a certain way about them, a mindset that comes into play whenever we see a big move like this. Whenever I see a big move like this, there's always two types of strategies I look for the following day. They're both very easy to learn and make money with, but one of those two strategies has the potential to make our entire week. So we'll cover both strategies in the video. I have a number of trades I'm tracking for tomorrow. By the time we're done tonight, you'll have an easy roadmap to make some money on Wednesday morning as well. So charts are all ready to go. Enough of the intro. Let's go find some more winning trades, make some more moolah on what should be a very busy day on Wednesday morning. S&P and SPY is all ready. As you can see, Nasdaq triple Qs are all ready. I have three very important clues on the charts in front of me that are telling me where I think the winning trades are waiting for us tomorrow morning. One of those three clues is right here on these hourly, these 60-minute time frames. You know, we've been bullish for a long time before we saw that big move down last week in the S&P SPY, big move down last week there on the Nasdaq triple Qs. We came into this week with the bears and all the control, but now we've made it back above the 21 EMA, pulled back and jumped going higher. Usually, whenever we see the move above the moving average, a pullback and a strong jump off that 21 EMA, that usually means the buyers are back in control of momentum. We assume right now the buyers want to go back into these ranges, acting as magnets overhead here on the S&P and the Nasdaq. That's an important clue, but I have two more, I think, more important clues here on some faster time frames to help us bring this all together, time the entries, and make some money on Wednesday morning. Before we jump into those faster time frames, those tick charts, don't forget tomorrow, there's no major news tomorrow. We get the two-day FOMC beginning tomorrow. No FOMC tomorrow afternoon. We'll wait until Thursday afternoon for the FOMC. They pushed everything back by 24 hours. I do want to remind you, though, there'll be no video newsletter in tomorrow night, right? I'll be out of the office tomorrow evening. I'm sure all of us here are going to be pinned to the poly market, watching all the results trickle in here tonight for the U.S. election. Hopefully by the time we come back on Thursday, we all know who the new elected president is going to be. We'll keep an eye on that overnight. I'll miss you guys tomorrow night, and of course we'll resume our normal schedule on Thursday evening's video. Back to our charts though. That's good to know when the news is or the lack of news tomorrow, but the money is always made on the charts. I talked about earlier how it looks like these buyers have clawed their way back in control of momentum on the 60. That is of course one big clue. I've got two, I think, even more important clues though right now on some tick charts. I like to use tick charts because tick charts are based on volume and they make pattern recognition so much easier. All the time frames you'll need if you're here for the first time right now up in the left-hand corner there. And this, my friends, is the 21 EMA. It is pretty much the only indicator I use to find lots of winning trades each week. There are two even more important clues here on these tick charts. One really big clue is we have a big range dating back to last Thursday and a big breakout. Now, anytime we see a range breakout like this, breakout pullbacks are one of the most common, consistent things I know about technical analysis and day trading. Anytime we see a range breakout like that, we love to get breakout pullbacks. The next clue, the final clue here is the size of that move. I mentioned earlier, we have a big move going higher. Big moves give me two different types of strategies for tomorrow. Why don't we cover the first one here on the S&P and SPY, and then I'll save the best for last on the Nasdaq here a bit later on in the video. The second game plan we talk about later on in the video is the one that really has potential to be the biggest moves, the biggest winners of the week. Now, put those two clues together. Range breakout, big move. I have four trades on my radar in that first of two scenarios for tomorrow. Starting off with a two-legged pullback. Whenever I have a big move, I don't want to buy high. I want to buy nice and low. And I think about buying nice and low, I always think about a two-legged pullback. Now, think about a measured move, right? One leg, two leg, 100% extension. That will give us the general area of where I want to be a buyer. The challenge though is it's very difficult to pick a bottom on that, right? What I'll do is that first of 4 trades for tomorrow is I'm going to use what I call a failure pattern. I'll let the bears come in, try once, try twice. Why twice? Because I want to trap those bears in. I want to use their stops to fuel that move going back up to retest the high. Now, on the way back up to retest that high, I want to try to add to my winning position. To do that, I'm going to use what's called a trap pattern. Traps are very simple. Get back above the moving average, shallow pullback, higher high in price, and I want to get right in again underneath that low. So again, anytime I see a big move like this, one of 4 trades I watched for the following day is a two-legged pullback. Again, I don't know how large that two-legged pullback will be, but that's the formula I look for. I'm not going to pick a bottom on this. I will trap in those bears, use a failure pattern, I call it. Then on the way back up to retest that high, I look to add to that winner by looking for a classic technical bear trap. It's that higher high in price, move right below that low. And remember, like I teach in the video classes, right? I want to see that green candle closing back above the 21 EMA. That's one of 4 trades I'm watching for tomorrow. Now, sometimes we don't get the chance to trap the bears in after that two-legged pullback. Oftentimes we get a two-legged pullback down here, but there's so many buyers down here, market simply goes whoop and goes right back up and takes out that high. These can be really, really challenging because you don't get the entry on the pullback. These most oftentimes will wind up popping up and begin to grind going higher. These grinders are very easy if you have the right game plan. First things first, you do not want to chase after it. Your patience will be rewarded if you mark a trend line. Off the highs, find that channel. Off the lows, look left. Find a prior swing. My favorite entry is always the first test of that new channel. I like to use bear traps like I'm showing you right here, but this could be either a bear trap, it could be a seller failure pattern, a pullback combination, any of the entry patterns I teach inside the free video classes. That's trade number 2 of the 4 trades I'm watching for tomorrow. Now, oftentimes we do get that two-legged pullback. I will get that failure pattern, right? Bears once, bears twice. I'll get a nice easy winner. I'll get that first target, stop moves up to point of entry. But oftentimes, because that pullback is so large and the pullback is so sharp like that, oftentimes we'll hold the underbelly of a range like this, a previous area of resistance, and we'll make another leg going lower. These are oftentimes the most lucrative version of a two-legged pullback because now anybody who sells short on that move, when they get back to that low, they're taking their profit down here, right? Most of the time, anyone who sells short right here, right, they become buyers at that low. This is a horrible spot to be a seller. And with a large move like this, it's a great place to trap in some rookie sellers chasing it lower. And I'll use that same 1 and 2, trap those bears in. As we run higher, look for that separation off the moving average, that higher high in price, and a trap right below that low. I call these double bottom retests, right? Again, we oftentimes get a winning trade out of that 1-to-1 first target, but it rolls back over again, takes out that low. Again, this is not a reversal. It needs to go a lot more than that to be a full-blown reversal. This is usually a gift to the buyers. So trap those bears in. Don't be picking tops and bottoms. So much easier to make money when you run stop stops, that failure into trap combination, and you know where the market wants to go. It wants to go back up and take out that high. That is 3 out of 4 trades I'm watching for tomorrow. And before we talk about that fourth and final trade here on the S&P, let's slow down for a second because we've got a lot so far. I know that most of you guys and gals watching right now, you know these patterns already. You're making money with these. But if you're watching for the first time right now, this might be way over your head, a new language to learn, a new strategy to learn. So don't you worry. I teach the entire roadmap. I teach all these setups, when to use them, how to use them. I have hundreds of examples, failures, traps, guys. I teach so much more of this in our free video classes. I'll put a link up top here for you. Don't you worry. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each morning. More importantly though, I want to teach you my 4 favorite entry patterns, help you time better entries, start making a lot more consistent money. Guys, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries right now, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there, take that free video course. Everyone loves all the trade examples I include inside that short free video class. It is perfect for anyone who's serious about making money in these markets. And don't forget too, guys, I'm going to put all the important links we talked about tonight, the description of the YouTube video. I'll put the free class links down there. Definitely start first in the free course, learn the roadmap, start making money on your own. And don't forget too, we trade together every day in our trade room. I'll put information to join us in the trade room, description of the video. And also, too, be aware, I post a lot of charts and videos and updates, mindset stuff on Twitter X throughout the day. If you're on Twitter X, give me a follow. Again, all the important details you'll need to learn more and hopefully help you earn a lot more are linked in the description of this YouTube video. Now, where did we leave off here? I covered 3 out of my 4 favorite trades here, and just the first scenario, right, for tomorrow's trading session. Let's cover now the fourth and final trade here. Now, I mentioned earlier, I want to buy nice and low with a 2-legged pullback. That's the goal of a 2-legged pullback. I don't want to buy high. I want to buy nice and low. Oftentimes what happens though is as this thing keeps on grinding higher, all we get are shallow pullbacks. I don't want to buy too high right now. So if all we get is a shallow pullback, what I'll do is try to trap the bears in and buy with what I basically call a 2-try trap. It's bears once, it's bears twice. I want to get back below that moving average or back above that moving average, strong green candle, and a run right back up again. These trades I often take on a half size position, a quarter size position, because again, they're not as desirable as that full 2-legged pullback into that breakout pullback zone. So if all we get here is a shallow pullback, the goal is I want to buy as low as I can. And like I teach in our free video classes, it's always going to be traps. It's a higher high in price. Again, it'll be almost always a strong shot lower. It'll pop back up again. You'll see bears will try to run it lower for that 2-legged pullback, but they won't get anywhere, right? They'll try once to do it. They'll go higher. They'll try twice to do it. That higher high is the giveaway, a strong green candle closing back above that 21 EMA, and that is your target going higher. Now, what if I'm wrong? What if I'm wrong about this? You know, it's election night right now. Anything is possible for tomorrow. How would I know when a pullback turns into a reversal? Usually the best way to tell if a pullback turns into a reversal is it will run lower and begin to grind away from that moving average. If it grinds away from that moving average, again, doesn't seem likely right now, but who knows, right? Tonight, again, we'll know more about how the election comes out. Anything is possible for tomorrow. If we get that strong run down and I begin to grind down that moving average, right? Grind down away from that moving average, you can almost always draw a trend line off those lows, pin that trend line up around those highs, find, again, look left, find some prior swings. And as always, I want that first test off the high of that channel. And again, I can't teach all the entry patterns right now in this YouTube video. You'll learn a lot more about these, of course, in that free video class I mentioned earlier. But this could be any entry pattern you guys are learning there. A bull trap, a buyer failure. We oftentimes see the market go above those highs. As we pull back to that moving average, buyers will try to buy it. That sets up for a failure pattern going lower, failure into pullback combo, and of course, right, taking out the side of that trading range. So in the rare occasion here where this big move evaporates, which again, isn't likely, but who knows, right? Election night is upon us, right? So anything is possible. The key though is that two-legged pullback, what'll happen is it won't pull back and 1, 2 and snap back up like I'm looking for tomorrow. What'll happen is it'll pull back and keep grinding down like that. It'll separate off that moving average. That will be your sign now, that grinding down, that now the bears are back in business again. We connect those lows, find that channel, and don't miss the first test is the best test off the high of that channel. All right, so now we fleshed out one of the two scenarios I look for tomorrow. I know I covered a lot so far in this video, but trust me, once you take that free video class, learn the setups, learn how structure works, this will get a whole lot easier. Let's go now grab the Nasdaq right now. Nasdaq, as we mentioned last night on the video we got that big, wide, expanding triangle here on the Nasdaq. Nasdaq buyers right now are trying to rotate all the way back higher. Now, before we talk more about Nasdaq though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. That makes a big impact on my YouTube channel because I get rewarded every time you like, share, and subscribe. So I know we're busy people these days. I know it's election night right now. I appreciate you guys spending a few minutes every evening on these videos. So thank you so much for the likes, subscribes, and all the support every step of the process. Now let's get back to business here and talk about the Nasdaq. The one thing I find that's interesting about the Nasdaq right now is go back to the S&P for a moment. You'll notice on the S&P, we had that strong run down. Remember, anytime we see a strong move in one direction, we expect a pullback and a retest of that level before we get that reversal back up. The S&P got that retest on Monday afternoon. The Nasdaq hasn't yet. The Nasdaq, you'll notice here, the Nasdaq had that strong run down. The bears were inches, a whisker, as you might say, right, away from retesting that low. What that means to me is the bears tried once to retest that low. As we go higher, I would expect the bears try a second time to retest that low. This is why I've drawn out that trend line off the high, marked that channel off the low. That would be a fantastic area to look for another entry long here on the NQ. That is what the 60-minute time frame is telling us right now. The buyers are trying to rotate back to the other side of that range. If you watch my videos, if you've taken my free video classes, you know how ranges work, right? They love to rotate back and forth. Now, the hourly chart is fantastic, but the tick charts are where the kind of the money is made every day. Now, over on your tick chart right now, there really isn't as big of a move that we saw here on the S&P. That might be because we haven't retested that low that the S&P had. So I wouldn't call this as big of a move as the S&P made right now, but you can easily see though this range breakout. There's your range. We now have a breakout, and of course a breakout pullback is almost always on our radar here after a range breakout. So very, very simply put, all the same setups that I talked about earlier on the S&P can certainly be applied here on the Nasdaq. I would love to get that two-legged pullback, so I'm not buying high. Again, think about that measured move. I would love to not pick a bottom on this, but trap those bears in with that 1, 2 try failure. And again, as we go back up and take out that high, add to those positions with those trap patterns I mentioned earlier on the video. So same basic idea there. Again, this may also be a V bottom. Off of that low at V bottoms, find that new channel off the highs, find those prior swings. Don't miss that first test is the best test. going higher. Don't be surprised if it runs lower, pops up, retest that low. These are oftentimes the easiest way to make money because anybody who sells up here, they're buying their way back out of that, taking profit at that low. It is that same exact game plan, right? That 1, 2, these double bottoms. This is a horrible place to be selling, which means it's a great place to be buying bear traps. One way to take a bear trap is trap them in 2 tries, run back up. And as always, that technical bear trap, you will learn the difference between a failure pattern and a bear trap pattern in that free video class, right? So by the failure, add more on the bear trap. And again, as I mentioned earlier, right? If for some reason we get that run down and they start rolling lower, grinding away from that moving average, again, doesn't seem as probable right now, but it's certainly possible because of election evening here tonight. We're going to mark off those lows, bring up around that high, and of course, find those prior swings, and don't miss that first test is the best test, going lower there. Again, kind of a recap there. We mentioned earlier on the S&P. Now, I promised you that a second scenario for tomorrow could be baked into this thing, and this second scenario could be a lot more lucrative, and you'll see why here. I currently have a range on the chart in front of us right now. That probably won't be the range we'll break into tomorrow. Let's get rid of that range here right now, and let's talk about if we wind up going sideways here for tomorrow. Anytime we see a big move in one direction like this, we look for a 2-legged pullback and a retest of the high or a trading range. Ranges are very, very common after a big move as the market has to kind of catch its breath, if you will. Now, 2 things about ranges. First things first is that ranges act like magnets, all right? Very, very important. They act like magnets. That's why a breakout pullback off the previous range is so common. Most importantly, though, ranges love to rotate. They rotate down, up, down, up. And we use what we call pendulum swings to measure below it, above it, below it. Okay, so they love to rotate, right? And they act like a magnet. What I'll do in these cases is I'm going to look left and find some support levels underneath this trading range. I don't know where they are or what levels we'll use right now, but that's the idea. Find the range, find prior swing lows. I like to use a triangle, expanding triangles, right? Megaphones, things like that. Find levels of support below that trading range. Then all I do now is I wait for a breakout. Now this breakout will almost always feel legit. Almost every breakout seems very, very convincing at the time, but don't lose sight of the bigger move going higher, and that range is a magnet. Now, this is where the fun happens because now this is a horrible spot to be a seller. What I'll do though is, again, I'm not going to pick a bottom on this, right? I'm not going to waste your time by using indicators and picking tops and bottoms. We all know that doesn't work enough. Consistency over the long run. What I'll do is use that same bear trap. 1 try, 2 try, trap those bears in and squeeze those stops. Now, this is where this scenario is oftentimes a lot more lucrative because now as we go higher here, I can use that same trap pattern, that same bear trap pattern as we go higher. Again, shallow pullback off the moving average, higher high in price, trap right below the low. Now, when there's a range involved, remember, where does the market want to go? It wants to now rotate from below that range all the way up now above on the other side. This is why ranges, the second scenario, is oftentimes the most lucrative trade we get the following day, right? Because now that range doesn't just want to take out the high of day like it would if all we got was a 2-legged pullback. If all we see is a 2-legged pullback, it simply wants to go back and take up the high. If it ranges here tomorrow morning, now it does want to take the high back out, but now it wants to go back and rotate to that pendulum swing. Where things get really fun is they bounce up and they basically fake out breakout, right? We're already way high up right now, right? So the odds are pretty good. If we go sideways tomorrow, then break out higher, this is not a great place to be buying. Oftentimes what happens is it will slingshot running lower, Now, again, this is where the fun happens because now we know the amount above the range can project now back below the range. That tells us now where to look for the entry. Now, this will feel really bearish, right? This will feel like the world's coming to an end. It will. It almost always is very convincing. But now you know better, right? This is not a full reversal. It's not a breakout for the bears right now. This is a great place for a bear trap. Now you know better. You won't fall for that trap. Now remember, I'm not going to pick a bottom on this because it may keep going, right? It may wind up grinding, as I mentioned earlier on in the video. But most of the time, what happens though is as it pulls back, well, we see the bears coming in, trying once, trying twice, trap those bears in, squeeze those stops with that failure pattern. And of course, as it rolls higher, it's always the add-on entry. Guys, if you want to make more money, start adding to your winners, and a trap entry is an easy way to add to your winners. This is why you'll hear me say, I wish every day was a range day, right? Because once you learn how ranges work, once you learn how to measure the amount above, the amount below, the amount below, the amount above, that will make it easier for you to time better entries. And knowing where the market wants to go, at least in my personal experience, makes it so much easier to let that trade run, right? You want to make more money, do a better job at letting your winners run, and ranges make it easy to know where to get in and where to leave that runner. So now we've covered two different scenarios for tomorrow. One of them is that nice two-legged pullback, trap the bears in. I mentioned a bunch of variations of that, so we'll see which one we get for tomorrow. And again, if I have it my way tomorrow, there'll be a nice juicy range up here somewhere, and we can use that range to buy the dip, trap the bears in, squeeze back up again. Again, pendulum swinging back opposite direction. Or if it gets fun tomorrow, right, it'll try to go up first, kick back down again, rotation, again, bear trap, and back up we go. Now, in the event this thing keeps going tomorrow, right? If we have a range up here and we keep on going, right? If we just keep on blasting out right now, we're way, way high up right now. It will be that two-legged pullback, buying that breakout pullback, right? Think about that measured move, those bear trap entries. It's the same game plan. It's just I don't want to chase it as it goes higher. All right, guys, that's the roadmap and a couple of different variations for tomorrow. Now, speaking of tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The easiest way to make consistent money in these markets is to come out and learn and trade along every morning in our trade room. I'm going to put all the important links you'll need to get started, where to learn more, and of course, how to join us every day in our trade room. As always, guys, any trouble getting access, you can leave a chat message there on the chat box. Call the office. I'm always here helping out students get started here. If you need help along the way, definitely reach out and ask for help. All right, guys, that's the game plan. Hope you learned a bunch here tonight. Hope you earn a bunch of this tomorrow as well. And hopefully I'll see you sometime soon trading with us, 8 o'clock Eastern time, all the SOT members in the morning. Trade in the meantime, guys. Be well out there. Be nice to each other. Get some sleep tonight. And I'll see you guys back here, not tomorrow night, on Thursday evening. Resume our nightly newsletter schedule, guys. As always, be well, be nice to each other, and be here next time. Adios, amigos. Bye for now.